timeline or even your TikTok timeline, people saying that they want to be the first Black millionaire in their family, right? They want to cultivate generational wealth. That's something that you all have said in the comments. You want to eliminate debt. You want to make sure that you're investing. Well, right now, the investment industry is not very diverse. And that's where you come in. During these sessions, you will learn all about an industry and you will make decisions on this is an industry that you want to choose, or at the very least, an industry that you can further understand. So tonight, I want you to turn your volume up. I want you to get your pens and your pencils ready. I want you to take notes and I want you to ask questions. Some of the housekeeping that I want you to keep in mind is that if you have logged into this session with your cell phone number, we need to have your name because we are absolutely taking attendance. These sessions are mandatory through August 4th. So if we don't know your name, we can't you as present. So we want to make sure that you have your names ready to go when you log into this session. Secondly, when you ask a question, we want to make sure that you identify your name and also the institution in which you are enrolled. Make sure that your questions are pointed, and myself and also my team, shout out to Troy Blyther and also Quincy Hinman, will be fielding those questions and lifting those up to our moderator and incredible host, Michelle Shell. Finally, it is important that you stay throughout the duration of this event. And so you should not be logging out before we say goodbye. We want you to get full access to the information. And we want to make sure, right, that we're not swimming in the ocean of knowledge and drowning in ignorance. And with that being said, I am so excited to introduce Michelle Shell, who is a chartered financial analyst and a member of the CFA Society Boston Financial Literacy Initiative. This woman is a boss. Her energy is high. You're not only going to see her now, but you're going to see her in a couple of weeks. And she is going to teach us today what is the investment industry. And at the end of that, she's going to introduce a couple of her colleagues to have a conversation about what this industry means to them. And with that, I want to bring up Michelle Shell. Michelle, come on up here.
Oh, wow. Kezia, your energy is amazing. Thank you so much for that enthusiastic welcome. So as Kezia said, my name is Michelle Shell, and I am delighted to serve as your moderator this evening. And in our session on July 28th. So tonight we're going to begin with an introduction to the investment management industry. I'm going to share my slides and get us all ready here. Okay, is everybody seeing the slides? How do we look? A thumbs up? Okay,
we can see the slides. Yep.
Awesome. Thank you. Thank you. Okay, so let's go. Okay, so financial services is often depicted in the media and certainly discussed in the news. You may have heard or seen some of the popular movies and television shows such as Wall Street, The Wolf of Wall Street, The Big Short, or maybe even Billions. Lots of money flowing around the world quickly and in complex ways serves as fodder for stories of shady business dealings and tales of greed and avarice, showcasing lavish lifestyles of those with enormous egos. All of that makes for excellent TV ratings. However, the day-to-day reality is not quite like this for most of those who work in the industry. One thing you might notice in these screenshots is the startling lack of diversity. Where are the people that look like us? Well, the truth is that African Americans are and have been successful asset managers for generations. Both of my parents worked in financial services. My father worked on Wall Street, and my mother worked in banking. I followed in their footsteps with my first job on Wall Street the Monday morning after I graduated from high school. I stayed in the industry for almost 20 years before beginning my academic career with college internships on the sell side, which we will discuss later, and on the buy side afterwards. All that said, as you all know, the wealth gap for people of color and our our level of representation in the industry remains relatively low. You are here to change that, and we are here to prepare you, support you, and guide you along the way. I'm joined today by 3 fantastic individuals, all based in Boston, who will help me to give you an insider's look and demystify to some extent, as much as we can in this little bit of time that we have together, the world of investment management. So I have Cynthia Roberts, who is an equity research associate at Adage Capital Management, which is a money management company. She's previously worked at Morgan Stanley and is on her way to Harvard Business School. Congratulations, Cynthia. We have Ken Johnson, who's a senior vice president and senior client portfolio manager at Income Research and Management, a fixed income asset management firm who has over 30 years of experience in the industry. And we're going to talk about what fixed income means later in the presentation. And then we have Keon Holmes, a managing director at Cambridge Associates, which is an investment consulting firm. In his role, Keon constructs and oversees investment portfolios for his clients. Again, we're going to spend a little bit of time later demystifying what all of this means. Welcome, everyone. So before we hear from them, I'm going to put my educator hat on and take you on a quick tour of financial services. While we do that, I'm going to reiterate what Kezia said. Please jot down your questions, put them in the chat. We'll ask and we'll get to as many of them as we can in the time that we have. I will encourage you to ask any question that you have. We have a wide range of familiarity in our audience with this industry. So if you have a question, there's a high likelihood that someone else has the same question. So don't be shy. Ask away. We're here for you. You may have heard other professors say the same thing. And we really mean it. Ask the questions. Okay. So now to get us grounded, we'll spend a little bit of time on the industry, as I mentioned, and then we'll move into a panel discussion. Though I have on this slide 15 minutes, 30 minutes, I'm hopeful that my little overview is going to last less than 15 minutes and we'll have more time to spend with our panelists. And certainly we'll get to your questions. Okay. All right. Now, so let's go. To get us grounded, the purpose of financial services is to connect capital users, which are the entrepreneurs, corporations, governments that need money. And I saw earlier that some of you are entrepreneurs or interested in being entrepreneurs. Well, there may come a time when you need to raise capital to operate your business. You'll need capital to buy supplies or equipment in order to grow. So the industry serves to connect people who need capital, the capital users, with the people who have capital to provide. Providers of capital typically don't need the money immediately, but they want to invest it so that it can grow for future uses, right? Capital providers are households as well, people saving for retirement, for example, corporations, governments, nonprofit entities. So in exchange for giving their investment capital or their money to the entities that need it, capital providers receive securities. That affords them the right to get their money back in the future. Okay. There are 2 ways that securities are bought and sold. They're bought directly through global stock exchanges or markets. Not necessarily stock exchanges, but global exchanges that you hear about on the news every day, like NASDAQ, the New York Stock Exchange, or the London Stock Exchange. Or the exchange occurs indirectly, like through intermediaries such as banks, insurance companies, or investment management firms. I kind of flipped through that one a little too fast there. So we're going to drill a little bit into investment management specifically, but I want you to note that it's just one part of financial services. Okay, so I said earlier that I had internships on the sell side, but my professional career was really on the buy side. So let's talk a little bit about what that means. So I mentioned that capital users are providing securities to capital providers. And in exchange, capital providers are going to provide cash or the capital to capital users. Well, the term sell side refers to the intermediaries that represent the capital users in this exchange. Okay, they are working closest with the capital users who are selling securities like banks, brokers and dealers, such as Goldman Sachs and Morgan Stanley, or JP Morgan Stanley, where Cynthia worked, or to date myself, the now defunct Bear Stearns, where I had my first job out of high school. So capital users, or the sell side, the capital users work with firms that are on the sell side in order to sell securities to the folks on the buy side. Now, the buy side, by contrast, are the intermediaries that work closest with the capital providers. They're going to pool the money that they receive from their clients, the households, the corporations, the governments, and the nonprofits. They're going to pool that money together, and they pool it into pools, funds, like pension funds, endowment funds, or mutual funds, which you've heard of, and they will then buy those securities that the sell side are offering in bulk in order to create investment portfolios. So you've heard of Fidelity, I'm sure, Wellington Management, Adage, and Income Research and Management represented tonight, and many of the other companies that you're going to encounter in this program operate on the buy side. New York, I should say, just incidentally, New York is kind of known as being the place where many of the sell side firms exist. And Boston is actually one of the cities where many buy side firms exist. Okay. So the fundamental service in investment management specifically is to create and manage investment portfolios to help clients achieve their investment goals, their financial goals. So I mentioned one financial goal might be providing for retirement. Another financial goal might be preserving the endowment of a university. In order to do that, investment managers have to take into consideration how much is being saved, when the money is needed, how much is going to be needed, as well as what securities are going to make for good investments. You may hear the term asset class. Now, asset classes are a grouping of securities that behave kind of similarly. They're the ingredients that make up the template for an investment portfolio. So some of the major asset classes, or the major asset class groupings that we consider, would be equities. And under equities, you'd see kind of stocks, different types of stocks, like US stocks, international stocks, emerging market stocks, et cetera. Fixed income would be bonds, government bonds, corporate bonds, international bonds, for example. Cash or cash equivalents for money market funds or other short-term securities. They typically are going to be redeemed in less than a year. And then other asset classes you would see, like commodities, like gold or precious metals. Cryptocurrencies are talked about these days, real estate, and other forms of private investments. One thing I would add is that this slide that I have here is illustrative. Not all companies categorize or consider securities in the same asset classes. So as you are working in companies, or working with companies, or working with your financial advisors in the future, This is directional, but not precise in terms of how we think about asset classes. Now, when investment managers are putting portfolios together, they have to think about what combination of stocks, bonds, and cash equivalents to use in order to achieve their investment goals. That's called asset allocation. And asset allocation is the first step in the investment management process once we understand the client's financial goals. So bear in mind, again, that a client could be an individual or it could be an institution like the university endowment or a pension fund. So after the asset allocation is created, we think of the asset allocation like a template. So from there, an investment analyst is going to evaluate and recommend specific securities that might be included in the mix. But the portfolio manager is ultimately going to decide how it all fits together in order to create that portfolio. And they're going to monitor the portfolio, and they're going to determine when they need to make changes. This process, what I have here in this blue box, this would be the kind of the primary investment management activities. But the process is supported by investment consultants who may advise or take over some aspects of the process for a buy-side firm. Supported by data vendors, news services, credit agencies. All of these kind of companies are providing timely information that the teams at these investment firms need in order to make good decisions. Shortly, we're going to hear from our panelists who represent firms within this space. And so you can certainly ask them questions about the work that they do. So finally, let's take a quick peek inside of the financial service firm. The teams within investment firms are organized and referred to with respect to how far away they sit from the client. So the front office are the client-facing activities that provide revenue, like sales, marketing, and client service. The middle office represent the collection of folks that perform all of the investment activities that we just discussed, and some aspects of supporting that activity. And then the back office operates primarily internal to the firm to make sure that the entire firm runs smoothly and efficiently. Roles in all of these areas are necessary and critical as you consider your opportunities in the industry. I would advise you to think about your strengths and where your talents lie. I personally found that my quiet conservatism fit quite well in the back office, where I was responsible for managing the operations, and it's no surprise that I'm now an operations professor. Okay, now enough from me. Let's hear from our panelists. I see that the chat has been quite full of questions. So I'm going to start with a few questions, and then we'll start going through your questions. So Ken, as a reminder, we have Cynthia Roberts from Adage Capital. We have Ken Johnson from Income Research and Management, and we have Keon Holmes from Cambridge Associates. Okay, Ken, so let's start with you, if I may. Ken, could you talk a little bit about your career path and what drew you to the industry? I mentioned to Ken earlier that I was going to call on him first because he's our industry veteran, as far as I could tell. Although he doesn't beat me by much.
Thanks, Michelle. The presentation was great, and I want to just say welcome to all the students. I'm very excited about the program and the internship possibilities. I started my career in 1991, to Michelle's point, so a few years before any of you were born. And what drew me to the industry is, to be perfectly honest, the idea of making a lot of money which was my perception, and also the idea of helping other people to make money. So some of the movies that and books that Michelle showed earlier in the presentation were part of that motivation. I remember in the 80s watching Wall Street, which many of you may or may not have seen. But I liked the fast-paced nature of this industry. I didn't know much about asset management. I don't think I knew anything about asset management at that time. I was really more focused on the brokerage industry and wealth management. And so I started my career with a brokerage firm, Edward Jones, and it really helped me to develop my presentation skills, my communication skills, and it was very dynamic. And then later I found out about asset management and started with a very small equity firm, which continued to really develop my skills. I learned a lot about the analytical side of asset management. And Michelle was talking about, the buy side versus the sell side, the client facing, and getting exposure at a small firm allowed me to do a lot of client facing work. I learned a lot of different skills, from front office to back office. So it's very helpful. And over time, I grew into more of a relationship management role, which for me really was the sweet spot. I consider myself a people person. And again, I really like the idea of helping people to make money. What was different about the asset management industry versus the brokerage industry, the asset management industry gave me exposure to institutions. And Michelle talked about that, and working with endowments and with private corporations and their retirement plans, and discussing ways to grow those plans. So that's what drew me to the industry. And then one last comment, what I found most interesting is that it's very dynamic. Everything affects the markets, everything affects the economy, and I found that really fascinating and wanted to learn more about that industry. So that's really what pulled me into the industry, and it's been 30 years, and I'm still just as excited today as I was, back in 1991.
Oh, that's fantastic. So Cynthia, I want to ask you, since you're the relative newcomer to the industry on our panel, if you can, and Keon, don't forget, I didn't forget you. I'm going to come to you. But but Cynthia, I wanted to ask you, just in contrast, because to Ken's point, Wall Street wasn't a movie that you watched in the theaters when it first came out. What drew you to the industry?
Yeah, absolutely. And this has been great so far, and thanks for having me. I think, so I was an engineer in undergrad. I really liked math. I really liked technical work, but I also really liked to talk. And so I really wanted to be in a job where I could be technical and client facing. And I was very lucky early on to find some mentorship at Morgan Stanley, and found that the equity research role was a perfect mix of those two things. So it was really great to just be able to do the technical analysis, do the math, do all the price targets and all of that stuff, and also be able to present that, to my colleagues internally and also to externally to clients. And, that's what led me to my job on the buy side, which has been equally, a mix of those two great things. And so that's really where I got interested, and, it stuck.
And it stuck. So when you first started, sorry, Cynthia, when you first started, what was your day-to-day like in terms of the learning curve? You're transitioning from engineering to finance in your first role on Wall Street.
Yeah, so I would say it's definitely a different path. I didn't come from a typical economics background, but what I think is great about joining a large scale firm is that they had unlimited resources to get me started. And I think it was really about just application and really wanting to do well, and having the resources to expand my knowledge on the economic side and on the accounting side. And the firm was great at doing that. And certainly it's something I suggest thinking about, from an offerings perspective. Large scale firms can offer you the help when you ask for it. And I think that's one of the lessons that I learned too, is just there are things there when you ask, and you can't be afraid to ask for help. And that's really what I took away from the first 2 or 3 years being on the sell side.
Mm-hmm. And then you now you transitioned over to the buy side. How would you contrast that? Or you heard a little bit from Ken on his transition and how he thought about the differences. How about you?
Yeah, I think it's great. One, to move from servicing clients to becoming the client, I think was a really interesting contrast. Same kind of principles, still able to do all the technical analysis, except now all of your talking are with, you know, executives trying to figure out how they operate a business, how they manage the street, how they manage expectations. And so those are the real key differences between the two roles that I had. I also was much more junior at Morgan Stanley, so a lot less access, but it was a great crossover of skills to just be able to take the same technical analysis and now say, you know, would I really put that behind an investment?
Mm-hmm. So Keon, can I switch over to you now and ask, first of all, have you introduce yourself, welcome you to the panel, and then just when you're ready to just chat a little bit about working with clients, large institutional clients.
Yeah, thanks a lot, Michelle. And my name's Keon Holmes. I've worked on Wall Street for many years, since the late 90s. And like Ken, I was attracted to the opportunity, the energy of the market in our society, being close to the capital. You know, everyone needs it. So it's really an attractive place to be in terms of being able to see so many things. And I started my career at JP Morgan on the sell side, and after business school, joined Cambridge Associates on the investment consulting side. And, you know, what I would say, based on what you were describing earlier, Michelle, where we sit is sort of in the closest to the buy side in terms of one level removed from the asset owners, from the ultimate asset owners. And you know, some of our colleagues actually work at asset owners after working at Cambridge Associates. But you know, what attracted me to this business is being able to work with mission-oriented clients. We work with endowments and foundations primarily, but also with ultra high net worth family offices and retirement plans and sovereign wealth funds. But for me, being able to have all the excitement of the capital markets and being able to look across asset classes and find the most interesting places to invest, or what parts of the economy are growing the fastest and what parts of the economy are decelerating, and what's inflation doing, what's deflation doing. All that stuff is interesting, but being able to tie that work with working with mission-driven organizations like large foundations that are doing great community work or policy work to solve social justice issues, or higher education institutions like historically Black colleges that are educating our future. You know, that being able to marry those two passions is what really makes for a rewarding career. And when I started my career at JP Morgan on the trading floor, you know, very exciting, but the average tenure, the oldest person on that floor was 28 years old. And so thinking about having a longer term career in the industry and doing good, you know, I found it in being able to serve in investment management on the buy side of things.
That's absolutely wonderful. You know, I was thinking, I was going to ask, and I may have asked, like what it is that keeps you in the industry. And I think that, you know, the idea of connecting to a higher purpose when we're thinking about the work that we're doing is part of what sustains us. It's why I worked in the industry for 20 years, why you guys have worked in the industry for 30 years, or 30 years in Ken's case. But we're getting there, Keon. And how great that we're still able to attract people as talented as Cynthia to come into this industry, and hopefully all of you as well. Now, I want to ask, you know, as you think about your career in the industry, so there's a lot of discussion about, you know, I started off saying that and showing that there aren't many people like us in the industry. And yet there are those of us who have been in the industry for a long time. What sustains us or sustains you being a person of color in this industry, being a Black person in this industry? Let's see, I guess, Ken, we'll go back to you first.
That's a great question, Michelle. I think, one of the things that I'm thinking about with the panel is, the early challenges, and I would say one of the early challenges was working long hours and getting up the learning curve. But one of the also very important challenges is being one of very few, or sometimes the only, Black face in a white environment, and adjusting to that. Also, the motivation for me was, again, really driven by something that Keon touched on, as well as having an impact, in helping clients at the retail level and certainly at the institutional level think through, problems. One of the things that's most interesting to me about this industry is that the problems grow faster than the solutions. And we're constantly, facing challenges, and clients are facing challenges, and we're trying to understand their objectives and help them get there with the right mix of risk and return. And I think that's what drives me, to this day is, Keon raised the topic of impact investing, and ESG is a big focus right now, and, developing solutions, for that, and helping clients think through that. Is something that interests me a lot. And there's just a range of factors that drive the economy and therefore drive the markets. And, clients are grappling with that, and, a term that, the students will hear at some point, and I'll just introduce it now, is fiduciary responsibility. and,
Yes,
and
will you
that
define it for
is
them?
our legal right to do the right thing for our clients, our legal obligation to do the right thing, for our clients. And we all share that fiduciary responsibility. Consultants like Keon and investment managers like myself and Cynthia, we share that, fiduciary responsibility. And that's something we take very seriously. And that's what motivates me to this day. And the long hours are still there. The competition is there. And it's great. The industry is growing, it's changing, because the world is changing. And, being able to partner with clients and, find the best ways to address these changes is gratifying. It's rewarding. It's also very motivational.
Cynthia, may I ask, one of the, I see a question here about the experience of being a Black woman on Wall Street. I can talk about my experience as a Black woman on Wall Street when I first started, but I would be dating myself. And so I think it might be helpful for our students to hear about your more recent experience being a Black woman in this industry.
Yeah, and I would say we've obviously made a lot of progress, but we still have a lot of ways to go. I think it's somewhat of a double-edged sword. I think there are a lot of times where it can feel very othering. At my firm, I'm the sole Black female investor. And that can sometimes be an isolating experience. I think on the other side, I stand out in every single room, and, there's opportunity to take advantage of that. And certainly it pushes me to be the most prepared because it's hard to blend in. And I think that, that can work to your advantage. And I think over time, and just to touch back on Ken's answer as well, like the people on this panel are people I admire and look up to. And, I hope that one day, I go from being on the wanting mentorship to being an advocate. And I think that's a point of like wanting to continue pursuing in this field, despite the sometimes isolating experience.
Indeed. And how have you found the work hours?
They're not short. The good thing is that it's good work. I've never had a boring day in my entire time I've worked professionally. So I think that's a good thing.
Yes, absolutely. Keon, can you talk a little bit about what it's like consulting to large institutions, people who don't, you don't necessarily work with on a day-to-day basis. And so you've got to like build relationships with people, with these clients, and then be able to advise them on really important high stakes decisions. Can you talk a little bit about what that experience is like?
Sure, absolutely.
particularly as a Black man?
Sorry. Yeah, that's a very good point. I would say that, our business is an apprenticeship model. So you really learn the business over time. And, one of the things I think one of my older colleagues said when I first joined the firm, like my first year in, he said, look, how does it feel to be the expert in a room whenever you walk into a room? Because really, our clients are really looking at us to be the expert. But of course, 1 year in, I was not. So it takes some time to really go through the process, be an apprentice, and learn. And then it's really about pattern recognition. You become a subject matter expert, and you've seen everything under the sun, and then you're able to plug and play, read the room, read the situation, and provide the right appropriate advice for the situation. So I think the good thing about our business, it is you do work hard, particularly in the beginning, to learn up and build those reps and build that build that pattern recognition ability. But over time, you really are able to leverage that, and you don't start working hard, but you have more ability to leverage a cumulative learning that you've had over the years, and it makes for a rewarding life as you go on. I do want to also mention one other point, Michelle, if I may go.
Yes, please.
Your earlier question about the diversity within the industry. As you know, it's a topic we talk about quite often. Data is out there that less than 1.5% of the industry assets are actually managed by diverse professionals, and that includes women, that includes people of color, broadly speaking. And when you strip it down to African Americans, it's basis points, probably single digit basis points. Anyhow, when I started my career 20 years ago, plus now, there were two large asset management, Black-owned asset management firms. All those years later, those are the two.
They're still here.
They're still here. So we haven't expanded. So for my work, it's been fun. I've enjoyed across asset classes, equities, fixed income, private investments, being able to identify and find and help Black entrepreneurs, build their businesses when possible, and if there's a right fit, but we're proactively trying to do that, and build a diversity within our industry, particularly amongst African Americans. So that's really helped me, stay engaged and again feel aligned for the work that I do.
Thank you, Kian. It's absolutely helpful insight, I think, for the students. Another question I would love to get your perspectives on are different backgrounds coming into this industry. So we talked a little bit that Cynthia came from engineering. Ken and Kian, what were your college majors? Ken, I guess we'll start Ken first.
Yeah, so I was accounting and finance.
Accounting and finance.
So when I started, when I started in college, my goal was to become an accountant, a CPA. Right. And my first internship experience was actually with a large accounting firm, and I realized that it didn't excite me as much as I thought it would. And then following semester, I took a corporate finance class, and and that really turned my attention to finance. So I ended up being finance and accounting, but started off with accounting. But to your point, I think one of the things that is very important for the students to think about is that there's a whole range of career possibilities within asset management, from legal to technology to operations to portfolio management, research analysts. And so there's a host of majors that are relevant to this industry. So as you think about your career in asset management, keep that in mind.
Yes, exactly. I think I mentioned to you guys at one point, one of the presidents of my division when I worked in investment management was an East Asian studies major. He would often say that he studied Buddhism. but yet went on to become a very successful investment manager. So there's, I say that to say that there's room for lots of different backgrounds within the industry. It's a matter, I think, of figuring out where you want to play. Keon, what was your background?
Yeah, no, thank you. Similar, I totally agree with your point just there. Similar to Cynthia, I was in an engineering background at Howard University, by the way. But I studied electrical engineering, and you know, my first job out of Howard was at JP Morgan. You know, first working in software development, building tools for traders. And I started taking something called the CFA program, which Michelle, I know you know very well.
Yes, indeed.
Yeah, so the CFA candidate body of knowledge, you know, was my pathway out of engineering into in software development, more into the asset management side, and so it's been rewarding ever since.
I think one thing that I would want to emphasize to our students is that the different educational experiences come together, and the differences in backgrounds, not just educational experiences, but personal experiences and professional experiences come together to help create this business and to create these portfolios, investment portfolios in particular. People bring to bear, we see medical professionals, doctors and physicians who are able to provide expert opinions when evaluating healthcare stocks, for example. And so people come with lots of different backgrounds and skill sets because decision-making at the end of the day is best when there are those different perspectives coming to bear. So I would encourage the students that if you have different backgrounds, not economics or finance or accounting, that shouldn't be a barrier to your interest or your pursuit of a role in the industry. Speaking of I guess, challenges, I'm curious about what new technologies or trends might be keeping you up at night, or or what are the things that the industry are kind of thinking about these days? I've been away for a little while, so I'm hoping you guys can bring me current. What's going on in the industry? What are the challenges? What are the things that our students should be kind of keeping their eyes and ears open to, which might help them prepare particularly for those who are going to be interviewing? Cynthia, let's start with you.
Sure. So I cover the consumer sector. And I would say a larger topic is just how the consumer is recovering from COVID and how we think about that recovery across, different ranges of incomes. Certainly the stock market has recovered much more quickly than the average person. And how do we think about those disparities? And how can we make way for improvements in those disparities, particularly as it relates to, government legislation, whether that be, daycare expenses or the minimum wage, livable working conditions. I think those are all going to be hot topics, as we get further into this recovery.
Cynthia, can you talk just a little bit about and help the students understand like what you do as an analyst and how you might think about the pandemic and how that might factor into the kind of decisions you might make in your job?
Yeah, I mean, what I love most about being an analyst is that no one day is the same as the previous one, and I think it's even more wide in the consumer space. I go from one day explaining why Addison Rae is famous on TikTok to the second day being like, how does Macy's have 30 days of cash to pay their bills? I think it's been an amazing process to watch, especially during COVID, to switch from what is a 5, 10, 15-year outlook for a business to, do they have the money to keep the lights on tomorrow if we stay closed? And I think that that's the brilliance of being in a role like this, is that you get to be very dynamic, and you ultimately, to be an expert, you have to continue to be a student of the sector. And I think that that's been one of the most enlightening parts of being, in this type of analyst role.
And so, Cynthia, sorry to just push a little bit. So how do you actually do that? So you like, when you get up in the morning, you're like reading the paper, and how does that, like, demystify it for us?
Yeah, and I would say one of the biggest transitions for me from college to the full-time role is just the amount of information that comes to you every day. I wake up and probably read, 30 to 40 articles related to my sector before I even start the day. And then I look at every single stock that we cover. We cover in the consumer sector roughly 200 names. I see news related to them. I see how they're trending, pre-market levels, meaning how there's an indication of whether the stock will go up or down before the market even opens, based on how people are bidding to buy or sell the stock. So I look through those, and then I spend most of my day, spend 90% of my day in Excel. If there's one piece of information to leave from this conference with, is that you need to really, really focus on Excel. I spend all of my time in there, mostly modeling or doing just large scale projects. I mean, what I love about this firm is that you can do many different things. For example, I spent 2 weeks or so looking at the housing crisis and the timeline of how that worked, and what are the factors that we can look for, and how can we look at if it's replicating again. I think long answer to say that it changes every day, but I think it's a lot of like, what I enjoy the most is that there's a lot of autonomy to bring new ideas to the team, to bring ways to evaluate to the team in a way that changes almost every single day.
Thank you. Ken, can you speak to some of that from a fixed income perspective? What does a fixed income person do that's different from an equity person?
Yeah, that's I'm happy to speak to that. I think one of the key differences, fixed income investors are, and for the students, lenders of capital. We expect to get paid back. As an equity investor, you are an owner of capital. And so, you hope to get paid back. There's just a different risk level.
Right.
There's a little bit greater upside with that greater risk level on the equity side. On the bond side, what's interesting, and there's a place for all of these investments, and what Michelle mentioned earlier, having the proper asset allocation mix. So when you're thinking about, returns on the equity side or fixed income side, it really comes down to how does these investments fit in your total portfolio. And from a client relationship manager perspective, I'm having those conversations with clients all the time, and as Cynthia mentioned, as she's going through individual companies and discussing, developments there, our job on the client relationship management side is to keep our clients from experiencing any surprises, any negative surprises specifically. So we're also digesting that information, and we are relaying information in real time to the extent that we can to clients on developments that affect holdings that are in their respective portfolios. And one of the things that we're focused on right now is the risk in the market. Valuations are really high right now. The market's done really, really well. We came out of the pandemic, and a lot of it had to do with the Federal Reserve's response. So the Federal Reserve has two goals. One is stable prices, are controlling inflation, and the other is generating full employment. And so the Fed acted very quickly in the pandemic, and it gave the markets confidence that there was a safety net, and that caused the markets to really recover strongly. And so now we're in a situation where valuations are extremely high, and we all know what goes up will come down at some point. And so we are helping clients to understand where we're finding value in this market, and how we are insulating our portfolios to the extent we can from some of the volatility, and trying to manage the downside risk. So that's one of the big things we're focused on right now.
Okay, thank you so much, Ken. I'm looking at the time, and I see we have and I see that we have a whole lot of questions in our chat. Kezia, are there questions that you would like to pose?
I am, oh, you're right. There are a lot of questions. Give me 1 second. There are two
Sure.
that jumped out, and some of these may have been answered in some of the other questions, but I'm just going to ask them anyway. So Elijah James from Kennesaw State says, when it comes to people who provide financial services like investment banks or investment managers, do their clientele also include individuals from lower income community? If so, okay, and if not, why not?
Who wants to take that one? Kian? You're up next.
I would say yes. I mean, I think banks, maybe not, investment banks tend to work with corporations and institutions, but obviously banks in general are going after all participants in the markets and all capital holders, or and providing capital and lending capital and providing bank services. And then now there's tremendous amount of work that some of the larger banks, JP Morgan, where I worked earlier in my career, have put dedicated efforts towards, banking in the Black community, and, in investing in the Black community. So I would say there's a tremendous focus on that at this moment in time, as people recognize in our country the wealth gap and the need to address those issues.
I would just add that, so although I'm no longer working in the industry, I used to work on asset allocation mutual funds and mutual fund products at Fidelity, it so happens. And my role at the time was to design holistic mutual funds that people who didn't have a whole lot of assets, maybe were starting out as investors, could invest in. So there were no investment minimums, but you could start and you could get a holistic portfolio that was the idea was that it would grow with you over time. So you have products like that exist today for entry-level investors. But I don't know, Ken or Cynthia, are you aware of other ways that companies are working with low-income investors?
I think on the institutional side, one of the ways that you get exposure to just a range of economic is the trustee boards. There's just a range of people, so you get the perspective of people across economic classes, and that's important because again, in Kian's role as a consultant advising these clients, and my role as a relationship manager on the fixed income side, we are trying to help endowments and retirement plans grow their assets, for their beneficiaries or participants. And a lot of the trustees that are represented on these boards are there to represent the interests of those asset classes. So that's just another way that comes into play here at the institutional level. And then at the retail level, what's great about this industry, I was talking about problems growing faster than solutions. There are now just a range of tools that are designed to bring people of all economic classes into investment and raise their education level and give them access to the markets in a range of ways. So that's also one of the ways that is addressing lower income investors or lower income people.
Thank you. So I see a question here that that I found intriguing, which was, how does fear, like being afraid that your analysis is wrong, when you're making an investment decision or investment recommendation, how do you manage that what is it, not like imposter syndrome, or like the fear of failure? How do you manage that in your work, in your day-to-day work in this industry, Cynthia? I mean, when you think about like how fast the pace is, how important the decisions are, the stakes are really high, and the fact that there are so few of us in the industry. When you're in the position to make a recommendation or make a decision, like, how do you manage that anxiety? Cynthia?
Sure. So I'd say one, I think fear almost needs to be there. Like, there needs to be a fear of failure to push you to, ask the best of yourself. And I think also this is also why, when we talk about long hours, like this is about putting in the reps. And sometimes the work is just, I know I can do it right because I've done it 1,000 times, and it's worth putting that time in.
And I would add to what Cynthia said. Cynthia said something very important on the question before, that she reads 30 pieces of information, before the market opens and her day gets started. And I think that's the other thing. We're trying to help clients make informed decisions. So as we're gathering information, it's almost like with any decision, you want to make a decision based on as much information that is available. And I think that's a part of it as well. Markets move in cycles. I was saying, we've gone through a stretch where the stock market, the bond market's all doing well. We know what could come next and how do we prepare for that. And so, yes, it's fear can be an important motivator. Gathering information and helping to make important decisions is also helpful to kind of dealing with that fear and making sure that, if you're wrong, that it's not a disaster. And you can justify your analysis and your decisions.
Right. I mean, it's like we're in you all are in an industry where no one has a crystal ball, right? So everyone's going to be wrong at some point or another, right? Like everybody. And so it's just kind of expected that some things are just not going to go exactly the way you think it's going to go. But you have to, I think, have not only the fortitude, right, to substantiate your decision, to back it up with your analysis, but also the courage to say, yeah, I didn't get that one right, but I'm going to work harder next time. I'm going to put in, I put in the work this time. I'll analyze it. I'll figure out what went wrong. I'll, that the mistakes that we make are not going to be repeated. Right. Keon, any thoughts that you would share?
No, I think that's right. One thing I would just say, it's important to try to learn about the industry as much as you can, and try to find some part of it that sparks interest and passion within you, and try to dig in that area so that you're an expert. And it's such a broad universe in our industry that any individual can be an expert in something and add tremendous value by having that differentiated knowledge. And so find that passion and dig. That's what I would say. And
find that passion and dig. I love that. Keon, we are at 6 o'clock. And that was a great way to end our session. Find your passion and dig. Thank you all for wonderful participation. Thank you all for all of your questions. I hope this has been a helpful introduction to investment management. I will see all of you on the 28th of July for our next session. I don't know, Kezia or Peter, if there are any other closing remarks, I will turn it over to you.
Sure. I know you all are all at home and muted, and that's because of us. Oh, I'm shiny. But let's give all of our panelists a round of applause. And our hosts, they did a fantastic job, and I'm sure that you all learned so much from them. Feel free to send us emails and let us know how the session went. We're also going to be sending an exit survey, and we're going to make sure to share your feed forward with our panelists. Again, panelists, thank you so much. You are what make Lighted Pathways possible. One of our students asked an incredible question about philanthropy and the ways in which you give back. And I think I speak on behalf of the United Negro College Fund and also all of our wonderful applicants here and say thank you so much for your generosity, not only financially, but also with information. And students, you'll be hearing Fragile updates. And until the next session, have a wonderful evening. Bye-bye, everybody.